Hi friends, this is Kishore. Welcome back to my channel. Last week, all three major indices are down. After 9 straight green weeks, last week it went red. So is it a buy the dip opportunity or market further goes down? So I would like to cover FOMC meeting notes analysis, last week economic data report, next week economic data and market index analysis. This is not a financial advice, just for knowledge purpose only. Let's jump into the show. The fear and greed index, it came to the greed. Last 9 weeks, the market went straight up, and then this week it came down. So from extreme greed to the fear and greed index came to the greed. And this is heat map, weekly heat map. Uh, Healthcare sector, utilities, a little bit of energy, and banks are recovered. Did little bit better than other sectors. And this is weekly heat map for the ETFs. Most of the ETFs are down. Only inverse ETFs are up, and also the natural gas. And this is sector performance, energy, financial, healthcare, and utilities. They end up green. Looks like all the defensive sectors are up and all other sectors are down. And this is 2024 trading calendar. If it's possible, take a printout of this one. I'll leave the link also in my description section. It has all the information like when is the VIX expiration, OPEX, and all other rebalancing stuff, all other stuff. Maybe I'll go to this calendar in another video deeply, because this is very important one, because it says lot of in the FOMC meeting dates also it mentioned, because those are the dates mostly may the SPY or all the major indices are up 1 or 2% up or down. And this is last week economic data report. S&P final US manufacturing PMI came 47.9, and construction spending decreased to 0.4 percentage, and the expectation is 0.6%. And ISM manufacturing, this came down to the 47.4, even though it is up than expected like 47.2. This is one of the concerning sector index. Last week in my 2024 outlook, I mentioned most of the banks are having concern on the manufacturing side, and it is tried almost 15 months down, and it's below 50 right now, like 47.4. This is one of the concerning. We need to look in further how it going to be. And on Wednesday, Fed released their meeting notes, and I'd like to go some important points in that. And ADP employment, that came better than the expected. Initial jobless came better than expected, and also S&P final US services PMI, it came better than expected, and also the employment data. So this is some of the snippets from the FOMC meeting notes. They clearly see the progress in the inflation. So whatever the rate hike or what are the measures they took, policy tights, it is helping to get the inflation down. But it is literally harming a little bit of the household sector still, because of the high rates or the higher prices. And also they mentioned one of the important thing, delinquency rates on the non-farm, non-residential CRE bank loans. Because last week in my 2024 outlook, I mentioned most of the banks are having concern on the commercial real estate loans, especially in the office sector. So the same thing they mentioned here as well. And also they mentioned delinquencies would likely surge again. They are not saying increase, they are saying surge. So because this year they are saying there are a lot of loans are coming to the maturity, and they're saying there is a high chance the loan delinquencies go up. So if it happens, then this impacts the commercial real estate stocks, and also the REITs, and also the regional banks, because most of the regional banks will give loans to the commercial real estate banks, commercial real estate loans compared to the national banks. And also they said some delinquency rates on auto loans were little changed in the third quarter. So this is one of little bit of good sign compared to the other. And also they said credit card delinquency is also rising further. And they said like members agreed to maintain the target range of federal fund rates 5.1 between 5.14 to the 5 and a half. So they continue the Fed rate, uh, same Fed rate, and they did not talk about anything Fed rate cuts in this. Further, they mentioned if the inflation increases, they're ready to increase the Fed rate also, but they did not talk anything about the Fed rate cuts. And this is number of recessions starting in the year of the presidential cycle. So right now we are in the year 4 in the presidential cycle. So based on the previous history, in the year 4 there is a 5 times recession came, and there is no recessions in the third year of the presidential cycle. And this is US ISM manufacturing index rebounds to the 47.4. But if you see here, so the ISM manufacturing report gauge edged up 0.7 points to the 47.4 in the December, remaining stuck in contraction territory for the 14th month. And Tiffany, PIMCO economist Tiffany also says the ISM services report should be taken with a grain of salt and predicts US economic growth will stagnate in 2024. So even if you see in the last week market outlook, a lot of banks said slightly bullish. They want to see how the first quarter and the first 6 months, how the year going to be, how the economic activity or economic growth would be. Based on that, they want to take the good positions on the second half year of the 2024. And also here they said Bloomberg markets, the ISM overall gauge of services decreased to 2.1 points, the most since March to 550.6 in the December. So, and this is ISM services PMI. If you see the services PMI, it was down 50.6 from the November 52.7, and the business activity is up. Employment was down, new orders are down, and supplier deliveries are down. So this is a little bit impact on the manufacturing side and the services side. Let's see how it is going to be the next coming months. And this is crude oil. Crude oil, as we talked about this one last week, like I said, last couple of weeks, there is a good support at the 70 levels. So it perfectly bounced it there, and now at 73.88, and I see the support at 70 and resistance at 77 levels. And if you see here, the CCA is going up and the RSA also is curling up. So I'm thinking it can go up to the 77 or 78. From there, we can see at the time whether it's going to be further go up or will come down. And this dollar index also perfectly bounced at the previous support at 100 and now at 102.435. I see a little bit chance of to go up because I based on the CC and the RSI, it can go up to the 104. That's my resistance level, and the support is 100. And this TLT, 2 weeks back I mentioned it hit the Bollinger Band and also a lot of up from the 82 to the 100 very quickly. So there is a chance it can take a some trend reversal for short period. So right now it is at 96.29, and I see it can go up to the 91 based on the CCA, and also volume is up in the red candle. So there is a chance it can go up to the 91 and then bounce. And this is TNX yields that also up slightly above 4 level, and also CSA is going up. As we see the TNX TLT is going down, so there is a chance it can go up to the 4.37 level, and it put a lot of weight on the technology sector and a few other stocks. And the SPY is a SPY daily chart. So the finally the Santa Claus rally failed. So the range is like 473.69, but it ended up closed after Jan 3rd, 468.69. So Santa Claus rally failed, and also right now we are at the first 5 days in January. How it is going to be? This is also another indicator. Both the indicators tells how the year going to be. If the Santa Claus rally is done, like if it is bullish, if it end up green means that year going to be bullish, but it failed, so it is red indicator. And also the first 5 days in January, if it closes above 475.28 on Monday, then it is bullish indicator to the market, otherwise it is also bearish. And this SPY weekly chart, so we can clearly see 9 straight green weeks, and then last week this is down. So right now I'm thinking it can go, there is no harm or there is no concern if it don't go below 461.8. If it goes below 461.8, then the chance of 451. But right now I'm a little bit inclined, it can go up to 461. That's one of the major support. And last week, even though it's a short week, the volume is up, that is a little bit concern, and also CSA is going down. And this SPY daily chart, we can clearly see here last 5 days it is going down, and the CC is also minus 22.61. So maybe 465, it's one of the good support level. If it breaks, then 462. So these are my support and resistance of the SPY. And this is number percentage of stocks about 20-day moving average in the SPY. So it is there at 86 levels for a couple of days, and now it is dumping down. Right now it is a 52.88. I use this as a I use this to know the pivots at the lower lows or higher lows, or higher highs or lower highs. And this is 21-day equity only put call ratio. This is also indicates the sell signal. It happened in the August, and again now it happened in the January. So the QQQ weekly chart, so if you clearly see here, there is a good support at 384 level. So if it breaks 384 level, then that is a concerning. Otherwise, it's okay. And last week, even though it's a short week, the volume is up and CSA is going down, which is a bearish sign. And it's a daily chart for the QQQ. And 394 is one of the good support, like Fibonacci level. If it breaks, then 389. 389 is very strong support level, because there are a lot of days it is there consolidating, and also the previous support is also there. So I'm guessing if it not hold 394, then 389 is a very good support level. IWM weekly chart. So right now it is 193. the Fibonacci level is 0.382 level is 189 level that previously acts as a lot of time acts as a support and resistance level. So that is very very key to the IWM. It should hold that level. If it don't hold 189, then 183 is the next support. And last week the volume is high and also CSI is going down, which is a bearish signal. And IWM daily chart. So here the CSI is going down like minus 33, and these are my support and resistance of the IWM. And finally, the summary is FOMC meeting note shows concern on the CRE and rise of delinquencies in CRE loans. The same thing we see in the 2024 market outlook reports in various banks. No rate cut information in the FOMC meeting notes. So we talked about this in my 2 weeks back FOMC meeting day. Even the media is saying rate cut information. It's only dot plot, not the JB Paul talked about it. Similarly, ISM manufacturing index is a little concerning. We see the same concern in various banks in 2024 market look. Santa Claus rally finally failed and now focus on the first 5 trading days in January results. So this will indicate how the year going to be for the market. So that's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel. If you like this, please subscribe. Please hit the bell icon so that you'll get notification when I upload a new video. Please share this content if any of your friends looking similar kind of content. Thanks so much. Bye bye.